and welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Shrishti Sharma, and with me today is Somit Sarkar. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we will connect with our experts where you will get a chance to write to us and get your stock-related queries answered. And today, onto the Buy Now, Sell Now lens, we're going to be focusing on the IT space. As given the news flow, the IT is actually showing some resilience. So what's happening in the IT space and whether or not you should be going ahead with some investment bets there, we will try to decode that as well. But before that, let's have a look at what the markets are up to. So the bear trap, Somit, actually has managed to fail, and Nifty is once again to be scaling back to that 21,000 mark, and similar is the like for Bank Nifty. A bit of a blip coming in just half an hour or so back, but now once again re-inching in the green territory to 47,300 odd levels. But other than that, some of the stock movers today, the life insurance companies are really doing well, from the likes of HDFC Life as well as SBI Life. They are in the top Nifty gainers. But look at the move in Hindalco. This particular counter is seeing good gains after the company announced that they're going to be setting up battery foil manufacturing facility in Odisha to tap the EV market and plan an investment of 800 crores, and that's Hindalco on your screen at the day's highest point. Other than that, the two-wheeler counters, Bajaj Auto, Hero MotoCorp also seeing good gains, but on the flip side, BPCL is seeing some downtake around 3.5%. Similar is the like for Eicher Motors, L&T, Maruti Suzuki. They are all facing a cuts of around 1%, but breadth of the market is quite even Steven as of now. Let's see who amongst the bulls and the bears get to take the charge in the second half of the trading session. But for now, Somit, let's move forward and let's talk about the IT space, because today there was a negative news flow on Infosys, but the likes of TCS, Wipro, they are doing well today.
Well, yes, as you were mentioning, that IT sector is on the lens, and a couple of trends that we are noticing. Firstly is the fact that in today's trade also, if you see, Infosys is the only stock in the Nifty IT index to trade in red, and also on a YTD basis, that is the only stock which has declined around, if you see what we are gathering here is the only stock in red, and it has declined around 2% on a YTD basis. But it's also the mid-cap IT stocks that have outperformed. To explain all these trends that we are seeing and why Infosys is down, we have Anisha joining us to give us all those details.
Sitting at a 19-month high, so after those slew of downgrades and guidance cuts coming in, it seems like maybe we are towards the end of the cycle. At least that is what stock move is telling you. Today, of course, Infosys is coming under pressure on account of the specific issue pertaining to the exit coming in of the CFO, and more importantly, the slew of exits that we have seen over the last 15 days. But if you look at a Tata Elxsi today, or a Happiest Minds, or even other names from the broader market, the IT universe, that is, all of these stocks are outperforming, and that's been the key trend across this year. I mean, if you look at the YTD moves of this year, you will see a persistent which is up around a 70%. Even other names from the broader markets, the likes of Tata Elxsi, KPIT Tech, have managed to scale up quite well for themselves this year. In fact, Coforge was up 50%, L&T Tech high by 35%, Emphasis on your screen high by 24%. But if you look at the other column, there you have the large cap IT names. Infosys down 2%, Wipro a paltry gain of just around 8%, TCS and Tech Mahindra too have managed to eke out gains of around 10 to 20%. Tech Mahindra, of course, on account of that leadership change, has seen better performance than rest of the peers, but the frontline index and the line stocks have been languishing, and the reason is the clear underperformance that we have seen in terms of growth. The growth has been reported at pretty much flat to a negative bias as well in the quarter gone by. Guidance cut has been there across the board, and the commentary from the management is also weak. They are not pointing to any recovery timeline, and that is what is worrying the street as well. And also, given the scale and size, they are a lot more, a lot more elastic to the US recession. So that is something as well which has been bothering all of these large cap IT companies. On the flip side, if you look at the mid cap IT companies, they are all in niche verticals. For instance, the auto ER&D segment is one space that has fired away this year, and you also have the robust growth coming in. Most of the companies have reported anywhere between 3 to 7% kind of quarterly CQGR as far as the IT companies are concerned. So you see the big disparity in the growth rates of the two verticals. You also have the diversification coming in for a lot of companies, and that too has augured well. On the valuation wise, it should stack up for you on the screen. By no mean feat the mid-cap IT is trading cheap, but the big call is that the mid-cap IT will continue to trade at expensive valuation because the growth is strong, and secondly, a lot of these companies have reached the size and scale that they can now start bidding for large orders as well. So these boys are turning into men per se, and that's why we are seeing big re-rating across the mid-cap IT sector. Back to you guys.
Well, thank you so much, Anisha, for explaining what's happening in the IT space, and definitely given the outperformance, like you rightly mentioned, boys are now turning out to be men's. And with this, let's go across to our experts to understand that which are the stocks that are on their radar as well as their take on the IT space. And Sneha, coming to you, because Anisha just tagged up the valuation perspective, the large cap versus the mid cap. So given this point, the large caps have been an underperformer, but do you believe that now is the time, because the consensus call is to get your exposure more into the large cap space, but will you be bullish in the large cap IT space?
Hi, good morning. Yes, we are bullish on the large cap IT space compared to the mid caps, and the main reason is that these large cap companies, the kind of deal wins that they have seen in the YTD of FY24, so that should actually start translating into a bigger volume for the companies in FY25, and that should be turning point for the companies, because then that would start translating into the revenue. And moreover, the valuation comfort is much higher in tier 1 companies compared to the tier 2 companies. The current valuation, like if we look at that along with the dividend yields that these companies enjoy, especially the large ones, obviously it provides us with a lot of comfort in the bigger names. So we continue to stick with the tier 1 names, given their growth outlook for FY25 compared to the tier 2 names, as well as the on the valuation front. So we prefer TCS, because TCS has been benefiting disproportionately as its clients are reprioritizing the overall cost rationalization and efficiency driven projects. So and in that segment, TCS has got its main forte, so TCS would be benefiting big way.
Well, thank you, Sneha, for that. Kunal, how are you seeing the IT sector, and what would be your top pick here?
Yeah, so bullish on the IT pack overall. Large cap IT names is something which I've preferred over the last 2 to 3 weeks. Particularly, I think from the point when TCS was almost at 3,300 levels, and Infosys, I think sub the 1,400 mark. So I think the space looks attractive even at current levels, and I believe the better change which is happening for the large cap IT names purely in terms of the stock specific moves is the move which we've seen for Wipro, because that's been a huge underperformer from the large cap IT space, and that stock has also made a very strong comeback, a 10% recovery for the stock so far in the last few weeks. So that itself indicates that this could be a good time where large cap IT stocks may not just rally up, but they may try and cover up the huge underperformance with respect to the mid cap IT names.
Well, thank you, Kunal, for that. And with that, let's slip into a short break, and we'll address as much as investor queries we can post that. So stay tuned into ET Now.
Welcome back to Buy Now Sell Now, show where we get you answers for all your stock related queries. Viewers, you can connect with us live on the WhatsApp number that is flashing on your screen, as well as you can write to us on our social media pages, that is Twitter as well as Facebook pages of ET Now, and we'll try to take as many queries as possible. And to answer your queries today, we have Sneha Poddar as well as Kunal Bothra with us live. And let's move forward to taking your queries then. And the first query that I have, Sneha, is from Rakesh Bhatnagar. He's writing to us from New Delhi, and he has shares of Swan Energy, 1,000 in quantity from a price of 428 rupees. This stock has been in the news on the back of multiple block deals recently. What's your advice on this? Should he continue to hold on? He's a long-term investor though.
Sorry, we don't cover the stock.
Okay, no worries. Anything on charts, Kunal?
Yeah, looks attractive. The stock has given a breakout. I think 355 or approximately was the previous closing high for Swan Energy on the monthly or in the quarterly charts. The stock seems to have broken out of those levels. And interestingly, the volumes in the last 1 or 2 weeks for the stock price, I think from the 350 levels to now 450, 465, where the stock is trading, has been on the much higher side. So maybe an average volume of almost 4x to 5x as compared to the prior averages for the stock price. That indicates this is a strong volume-based buying for Swan Energy. So, if you are holding on to the stock on a positional basis, I would suggest continue to do that. And if you're looking for a fresh buy, I think it could be a good starting point at current levels as well.
The next query is coming in from Shudarshana from Bengaluru, and it's for you, Sneha. It's on the oil marketing companies. Now, she's holding shares in BPCL and Indian Oil Corporation, and she's mainly holding these shares for a high dividend yield. Now, should she continue to hold it for long-term wealth creation?
Okay, among the oil marketing companies, I would prefer IOCL because that enjoys much better refining margins compared to BPCL and HPCL. And moreover, with the kind of the fuel price rate cuts that is going on. So if that happens, then these companies might face pressure in the near term. So it's better to book out. If one has to hold, then one can look at IOCL, which has a good mix of refining as well as marketing margins. So refining margins are supposed to be supposed to see improvement for this company, whereas even there are quite a number of new projects that the company is working on, and which is likely to commence from FY25 onwards. So the benefit of which the company should reap. So we prefer IOC if one has to really bet on the oil marketing companies.
Okay, that's the take on the OMCs. But moving on, and Kunal, the next query is from Mithun, and he's bought 2,000 shares of Camlin Fine Sciences from a price of 164 rupees. He's at a loss in this one. Should he continue to hold this particular counter, or maybe average at this point in time?
See, I would suggest to just hold on to the stock as of now, because there are two mixed signals which are emerging on the stock. So on the daily charts, for example, the stock is showing signs of a breakout on the indicator front. Yes, the prices have recovered marginally, but when you look at this in the context of the recent price correction from 180 to I think 125, this could just be a minor rally in the offing for the stock price. The bigger breakout could actually happen for Camlin Fine if it breaks past about the 50 and the 200 moving average. Currently, these averages are placed closer to 143 as well as 155 respectively for the stock price. So let the first level of breakout happen about 143. That's where there could be a slight higher degree of confirmation that the stock can get into a breakout mode, and about 155 is where you should definitely look to average.
Well, the next query is from Ephraim from Dubai. He's a long-term investor. He's holding shares in Tata Chemical at a price of around 1,085 rupees. Should he hold, add or sell the stock? Sneha, the query goes to you.
Okay, I would prefer to actually exit the stock because there are a couple of short-term challenges that the company is facing in terms of soda ash demand-supply dynamics, owing to the new capacities which are coming up in China. So, though the situation would balance out over the long term, but in the near term, definitely the challenges would be there. I would prefer to exit at the current levels, probably later, like 6 months down the line, when the things settle down, and when the the opportunity from the new applications emerge, like the solar glass and the lithium-ion batteries. So the demand would pick up from these segments. So then one can actually look to re-enter, but at the current levels, one can definitely exit.
Okay, once again coming to you, Sneha, this query is on IndusInd Bank. Kishore Bajaj bought 300 shares of IndusInd Bank at a price of 1,710 rupees. It's been 3 years that he's holding this particular counter. Any expectation that he will get his capital back? What's your take on this one? Should he continue to hold on?
Okay, IndusInd Bank is showing improvement. The healthy traction is seeing across the across the segments, and even the retail disbursement has picked up really well. So we expect this momentum to sustain, and even the management is quite confident of achieving 20% plus kind of growth in the overall retail loans, with retail deposit mix improving. So we believe that one can really look at it from the long term perspective. Probably in the in the near term, immediately the capital might not come back, but from the over the medium to long term, definitely he would get his capital back.
Well, the next query is for you, Kunal, and it's from Siva from Chennai. He's asking your view on Canara Bank. Is it a good buy at current levels for short term, and what target can he see for the next 3 to 6 months?
Yeah, so I think if you are looking at it from a 3 to 6 months perspective, a buy on dips approach could be a better approach. So so first of all, yes, it's a very good buy from a portfolio perspective. The stock has done pretty well for itself, and I think if I'm not wrong, price wise, it's one of the better performing mid cap end or tier to large cap end PSU banking stock. So I think in that regards, it's a stock which should be part of your banking portfolio as such. But maybe it may not be the best price to try and buy a full quantity over here for Canara Bank, because the stock somehow seemingly is getting into a zone where the volumes are dipping down. So prices are going to a very slow uptrend, but volumes are dipping down. So maybe that could be one of the reasons why there may not be full-on participation into the stock price. So wait out for a price correction. If that happens for Canara Bank, that could be a good opportunity to enter into the stock.
Kunal, once again coming to you, since we were just discussing about the IT, Jaya from Bangalore is holding shares of LTTS from a price of 4,350 rupees. Wants to know how is this counter looking on the charts and any target price that you can help her with.
So again, bullish on IT space, and even NT Technology Services has been doing pretty well. So it's come back into a breakout of a couple pattern on the weekly charts. I think the breakout point was around 4,900 levels. But the way the stock is moving, it's a very slow, gradual moving stock. So as of now, I would suggest to stay invested into this name and maybe keep that 4,900 mark as a trailing stop loss if you're looking at it as a short-term kind of a trade. If not, then continue to hold on from a medium to long-term play.
The next query is for you, Sneha, and it's from Venkat from Dubai. Now, he's holding shares in two of the defense companies, that is Zentech and Data Patterns, and he's not making much gains in both the counters. He's asking whether should he hold or average or exit these two counters, or any other defense name that you would suggest him.
Okay, Zentech can be held on because the company has been reporting a good set of numbers, and it is quite confident of maintaining its the profit run rate that it has witnessed. The kind of traction that the defense stocks are witnessing, so definitely the company can do well. But if really wants to exit this counter and look at some other names, then in the defense space, one can really look at BEL, which is doing very well. The kind of order book that they have built up would really translate into strong revenue growth for the company over the next few years. BL is quite diversified in terms of the order book. So we believe that it's one of the best bets in the defense space, and it can be followed up with HCL. HCL, despite the sharp run up that we have seen, but the kind of order book that they have, the order intake that they have got, it provides very strong visibility for the next few years. So HCL and BL both, despite the run up, still looks comfortable even on the valuation front and on the growth outlook front.
Okay, those are the top picks from the defense space. But Kunal, the next query is K. Parthar Sarthi. He wants a technical view on HCC, where he has bought 300 shares from a price of 45 rupees, and another take on Yes Bank, holding 500 shares at a price of 70 rupees. Should he hold both of these counters? What's your take since he's at a loss?
Yeah, you can continue to hold on to both of these names, but I would not suggest to add or average both these stocks at current levels because of the way the short-term positioning is for these names. Because Yes Bank today, after this 6.5 or 7% up move, seems to be coming back at a multi-month high. So I think the timing may not be apt for the stock to you to average the stock, and so would be the case with HCC. The stock has already gone through a multi-month, multi-quarter breakout about the 30+ mark. So I would suggest to wait out for a dip if you're looking to average.
The next query is again for you, Kunal, and it's from Dr. Kulveer Singh from Chandigarh, and he's asking your view on Zomato. Should he buy, hold or sell at 84.62 rupees?
So 120 approximately could be a good point where you may look to book profits on your investments over here, because my sense is that the stock is going through now a range action. So 105, 108 approximately is the lower end of the range for Zomato, and I think closer to 125 odd mark is the upper end of the range. Now the stock is at 180 levels, which means closer to 120 or maybe slightly higher is a good point where you may look to exit. And in case if you're looking to buy back again, sub 110 could be a level where you can look to chip in.
Thank you, Kunal, for addressing that. With that, let's slip into a short break and we'll be back and we'll address more investor queries post that.
Welcome back to Buy Now Sell Now, show where we get you answers for all your stock related queries. And moving on with the same, and Kunal, coming to you to have your take on Lupin. Dr. Ravi has bought Lupin futures from a price of 1245 rupees. This one is for the December expiry. What's the view? Should he continue to hold on towards the end of this particular expiry?
See, you can hold on to the stock as of now, but my only concern is that on the intraday charts or maybe the short term, the hourly chart specifically, the indicators are still into a negative territory. Now it's trying to get into a recovery, but I think the breakout is not happening for Lupin. So I think in this context, what I would suggest is keep 1260 as a benchmark for the stock price. Whenever the stock closes above those levels, say even on a hourly candlestick perspective, then you can expect that the stock would get into a breakout mode. And in that aspect, above the 1260 mark, once the stock sustains, keep a trailing stop loss of 1230 and then keep on doing that for the stock price to ride the uptrend. So hold on to the stock as of now, but wait out for the trigger point about 1260. Before that, after that, you can trail the stop losses on the stock.
The next one is again for you, Kunal, and it's from Kabir Bedi. He has purchased around 750 shares of Vatek Vabag at a level of around 450 rupees per share 2 months ago. Now he's asking whether should he book profits or should he continue to hold the stock for another 3 months.
See, I think you can look to book profits over here. Now, the only concern is that the daily charts are showing signs of RSI divergence. So, long-term charts are very attractive for the stock price, but the concern is that on the daily charts, there is an RSI divergence, which means that the stock should ideally come back to that sub 600 level before the RSI divergence corrects itself. So I would suggest to book out profits over here. Since your time horizon is just limited to 2-3 months approximately, I would believe that in the time span there could be a higher chance of this correction wave first and then a pickup later. So it's better to book out profits over here and look to buy back in case if you have a higher time horizon sub the 600 levels.
Okay, Sneha, coming to you to have your take on Root Mobile. R. Ganesh has been holding the shares from a price of 1850 rupees at a loss in this particular name. What's the outlook on recovery?
I would actually suggest to exit from this counter, as the recovery would take a little longer, given the global uncertainties that we are witnessing. So this counter would take time to see rebound in their overall in demand. So exit at the current levels, that would be a better strategy.
Well, Sneha, the next query is for you, and it's from. Actually, he has not mentioned. It's from Sudha, and here she's saying that she wants to know the entry points for a couple of actually 4 of the stocks for HPCL, Cochin Shipyard, CSE, and Tata Power. Is it a good time to buy these 4 counters from a 2-year perspective?
Okay, HPCL I would say avoid. Tata Power would be like a good entry point at these levels. The stock has already run up, but still there's a lot of potential which is left for the investors because the kind of investment that the company is talking about in the renewable energy. So definitely the benefits would be seen over the coming years. So Tata Power definitely at this price. CSC I would tend to avoid from the power space. If one really has to look, then Tata Power and probably the new listing, which is IRDA. So these 2 counters are much better bets.
Okay, Kunal, the next query is from Dean from Goa. I guess he's writing to us for the first time and he wants your take on L&T. He's been holding 50 shares from a price of 2,000 rupees. Wants to know the short-term targets on this one.
So short-term wise, I would believe that the stock could get into a mild correction. Last 2 or 3 days, the stock is showing some signs of a resistance at the 3,400 mark. So as you can see, the 3,400 levels, 3410, 12 odd mark seems to be acting as a resistance for the stock price, which means on a very short-term basis, the stock may actually come back to 3,250, 3,270 levels. So there could be a correction of another couple of percentage points if you're looking at it as an extremely short-term play. But since you've bought at 2,000 levels, and I'm assuming that you're a long-term investor, I would suggest to stay put.
Sneha, the next query is from Bharti. The way she is holding a Biocon around 450 shares, she's asking should she continue to hold this stock from 3 to 5 years perspective.
Okay, Biocon, I would suggest to exit because somehow the company tends to does not meet the expectations on the quarterly numbers front. So it has, I mean, over the last few quarters, it has continuously seen the earnings cuts. The challenges continue for the company, both in the generic segment as well as on the biologic segment. So it's better to actually exit from this counter and switch to Sun Pharma, where the Sun Pharma is seeing actually very strong development on the US market front, given the niche presence that it has on the specialty side. So the traction is really building up for the company, and even its domestic business is doing quite well. So I would rather switch to Sun Pharma compared to Biocon.
Okay, Sneha, once again coming to you. This one is from Suresh from Hyderabad. He's a long-term investor, and between Ipca Labs and Sula Vineyards, he's confused to which one to buy amongst these. And is this the right time to enter any of the counters that you like amongst these two?
Okay, so both are like from the different sectors, but still, IPCA has been doing quite well. Quarter after quarter, it has given a good set of numbers, and uh, the only pain point for IPCA is the recent acquisition that they did of Unicum. Unicum, so that has been done at a higher valuation, and the synergy would take time to play out. So the valuation also doesn't provide that much comfort. So I would rather not go for IPCA. Sula Vineyards can be looked at from the valuation perspective. It's a little pricey, but the company has been doing fabulously well, and the volume growth has been quite good for the company. It has also diversified with the opening of the vineyards in the south market. So the potential is really good for the Sula Vineyards.
Track DCX system? Sneha, do you track DCX systems?
No, we don't track that.
Okay, then Kunal, what would be your view for this stock? Aparna from Thrissur has bought that at around 280 rupees, and she wants to know your view for the next 12 to 24 months actually.
See, the chart history is limited for me to go beyond maybe a couple of weeks or maybe a couple of months for the stock price in terms of a possible forecast. But I think looking at the recent charts in the last 2 months of price action from 265 or 270 levels, the stock has moved towards 380 mark. So it's been a decent 30% plus move for the stock price in this last 1.5 odd month. Just looking at that price recovery, the volume pattern so far in this last 1 month, I would suggest to stay invested.
Okay, Sneha, the next query is specific for you. This one is from Krish from Chennai, and he's written to us to know more about KPR Mills. Is this a good stock to enter into for the long term?
Yes, definitely. KPR Mills can be looked into from the long-term perspective, and in fact, overall textile space is seeing the traction building up. Within that space, KPR Mill is very well placed. It has got very strong track record as well. So one can really look at entering at this point in time.
Okay.
Well, the next one is for you, Kunal, and it's on Apollo Hospitals. Okay, someone has not mentioned his name, but he's holding around one lot of Apollo Hospitals, the 5,550 call at a price of 195. He's asking what to do, whether should he hold, sell, or buy more.
So I'm not sure the current market price of the option, but yeah, I think it's a decent kind of a chart for Apollo Hospital. The only catch with this name, because I've tracked this counter earlier also, that it gets into that or there's this erratic phase of high volatility all of a sudden which comes into the stock price, and that dampens the option prices for the stock over the near term. So as I said, I'm not sure of the current market price for the options, but I think I would suggest that keep a stop loss of 54.50 approximately on the spot levels for the stock price, and whatever the call price option the option price is at that point of time, I think that could be a trigger point for you to exit the trade. Till then, hold on.
Okay, Kunal, what's your take on Tata Steel? The metal counters are doing quite well today, and Devdas from Bhilai has written to us to know your take on Tata Steel. He's holding 500 shares from a price of 115 rupees. Any targets to look out for?
See, I'm very bullish on the stock on the counter from current levels also. Now, I think I flagged off Tata Steel earlier, but my only concern for the stock is that that when you try and compare this with the likes of JSW Steel, Alco, Jindal Steel, etc., the stock has apparently been a sort of an underperformer purely in terms of price performance. But we've seen the pedigree of Tata Steel over the last 10 odd years, that the stock gets into that strong phase of recovery or a price trend and tries to cover up the underperformance, even if it's from a longer term perspective. So stay put. Since you've bought at lower levels, I would suggest to stay invested into the stock.
Well, Kunal, the next query is from Ranjit. He's from Gurgaon and it's on Balrampur Chini. He's holding around 400 shares at around 420. He's saying he can hold for the next 3 to 6 months. Should he continue to do that?
It's an event-driven stock, because we've seen what's happened to the stock in terms of in the entire sector in terms of the news flow. Now it's very difficult to try and give a buy call over here for the stock, because in case if there is any kind of a further negative news flow which could aggravate, then the stock price may get into a correction. Ideally, you should wait out for the stock to break out or maybe retrace at least 50% of the sell-off. So for example, from 480, the stock has come back towards say approximately 400. So 440 becomes the trigger point to go forward for a fresh buy into the stock price. So I would suggest to wait out for the stock to cross at 440 levels if you're looking to average further.
Okay, let's give a bit of a breather to Kunal and Sneha. Coming to you, this query that I have is on Sterlite Technologies. I'm not sure whether you tracked this one or not, but Poonam from Punjab is holding 200 shares from a price of 159. Is this in your coverage list?
Sorry, we don't cover this counter.
Okay, so let me take the next query that I have. And Sneha, any take on GMDC? Panduranga Rao is a long-term investor and holding the shares at from a price of 62 rupees.
Okay, GMDC one can really keep on holding purely from the kind of dividend yield that the stock gives. Though anyways, the counter would be in radar because there's the kind of auction that the government is doing for the rare minerals. So obviously these companies would benefit, and along with that, the dividend yields that these companies enjoy. So it actually translates into a good buy from a long term perspective.
The next query is from Susil Kumar from Trichy, and it's on NMDC and Sun TV. He wants to know what's your outlook. Should he continue to hold or exit or book profits in these counters?
Okay. NMDC one can continue to hold as the capex that the company has been ongoing. That capex is likely to get into production from FY25, so that would really boost the revenue over the next few years. We have a buy on this counter, and it's one of our topics in the metal space because we are more comfortable with the kind of growth outlook that this company enjoys and the kind of volume growth that the company has seen quarter after quarter. So it gives us a lot of comfort on NMDC.
Thank you, Sneha, for that. With that, let's slip into a short break and we'll be back to address more investor queries.
Welcome back. You're still tuned into Buy Now Sell Now on ET Now, and moving on to the next query then. And Kunal, this one is from Shilpa from Hyderabad. Guess she's writing to us for the first time, and she's quite confused to which of the stocks to enter into. She has names like Tata Power, IRCTC as well as SBI in mind. Any stock that you like for a short-term period?
I think all three of them are good. I'm not sure what's the rationale of picking up just one of the names. Tata Power is a stock which is into absolutely strong momentum. The stock, after I think 2 years, has broken past about that 300 levels, which is a very good breakout for the stock price. IRCTC is yet to confirm a breakout, and SBI is on the verge of a breakout about, I think, that 625, 615 or 625 mark on the spot level. So I think all three of the stocks are positioned in a different manner. Now it depends what your style is. If you're looking at trying to buy breakout stocks or looking to ride the momentum, then I would prefer Tata Power. But if you're looking to buy maybe a stock which is on the verge of a breakout, then go for SBI.
Kunal, again, the next query is for you from Jaya from Bangalore, and she's holding shares of Finolex Cables at a price of around 988 rupees. Should she continue to hold or sell?
I think you should definitely look to hold on. My sense is that the stock should come back to the previous highs of 1200 plus in this leg of uptrend. Maybe it could try and take some bit of more time because of the inherent low beta nature of the stock price. But I think 1200-ish is where you can possibly look to consider booking out profits at that point of time.
Okay, Sneha, what's your take on JSW Energy? And Guru Prasad wants to know, is this a good investment idea to continue holding for the next 1 year?
Yes, one can really hold on to JSW Energy because even this company would benefit from the investments that is going in on the renewable energy side. But compared to JSW Energy, I feel somehow the valuation has become a little expensive. So it would be better to actually go with Tata Power compared to JSW Energy.
The next query is for you from Sheshama from Chengalpattu. She has around actually she hasn't mentioned the quantity, but she has Wipro shares bought at price of around 509 rupees actually, and she's asking whether should she continue to wait on this counter and or shift towards HUL.
Okay. Wipro, though the near term performance would continue to remain weak. However, uh, if whenever the market recovers, whenever the discretionary spend revives, we believe that probably Wipro might turn out to be a dark horse. And given the exposure that they have towards the consulting side, so they might be one of the early to benefit from the demand revival. So this can act as a surprise element. So one can bet on Wipro at these levels because the valuation is very attractive. The valuation gap has widened a lot with the other tier one names. So Wipro would be my better bet compared to HUL because HUL somehow the volume uptick has still not really been very good for the company. So the stock continues to be a laggard over the last more than 1 year.
Okay, so that's the take on HUL as well as Wipro. But with this, viewers, let's kickstart taking all your stock-related queries in the rapid fire session. And the first query for you, Kunal, this one is from Sridhar, and he's been holding NMDC from 185 rupees. Any targets for a positional bet?
Continue to hold on. Near-term targets you can look out for should be a break of the 200 mark.
Sneha, for you, it's from Sandeep Kumar. He's holding a Tata Chemical and Tamil Nadu Mercantile Bank. Should he continue to buy on every?
Tata Chemical, both the counters I would suggest to exit actually.
Okay, Kunal, just today Binoy has entered into HAL from a price of 27 to 85 rupees. Will this go up even more?
Doesn't look like. I think you should have a trailing stop loss.
Kunal, the next query is for you from Shivananda Balika. Should he continue to buy UPL at current levels?
I'm not bullish on the stock price at current levels. Only a breakout above 630 is where you should look to add.
Okay, Sneha, any take on Granules? A viewer, he didn't mention his name actually. SV Kamath is his name. He's holding shares from a price of 373 rupees. Wants to know what's the future prospect of this one.
Okay, somehow the company has not been performing well over the past few quarters. So if he's a long-term player, then he can definitely hold on. But from the short-term perspective, the stock might remain under pressure.
Sneha, the next query is from Mahalakshmi from Hyderabad. Which one is a better buy for long term? Is it Polycab or Havells?
Okay, Polycab would be a much better bet. Though even Havells is recovering a lot. The Lloyd is picking up the market share. So Havells might perform over very long term, but from the immediate basis, Polycab remains a better bet.
Okay, Kunal, any take on Renuka Sugars? Bhuvesh Wari is been holding the shares from a price of 52 rupees. Wants a 3-month target on this one.
Well, as I said, difficult for the sugar stocks to get into any kind of a major recovery on an immediate term. I would suggest to just hold on to your existing holdings on Renuka.
And the next query is from Peter, and it's for you, Sneha. Websol and Data Patterns for long term, 3 to 5 years. Which one should one buy?
Okay, Websol, I don't have a view. Data Patterns, purely from the valuation perspective, it has become a little expensive. Otherwise, one can hold on because there's a lot of investment which is happening on the defense side, and these companies would continue to benefit over the long.
Okay, so that was the last query that we could take in the rapid fire session as well as onto the Buy Now Sell Now show. Thank you so much, Kunal and Sneha, for joining us today and helping all our viewers resolve their stock related queries. But with this, it's a goodbye from me and Somit and the entire team who put this show together. Thank you so much for watching, but don't go anywhere. Markets at noon will take the action ahead.